making $339 trading the Russell 2000. We played IWM. Mike's all out of whack here today. We played IWM, and because I couldn't trade the Russell futures on one of the prop firms, the one-of-one prop firm doesn't allow me to trade the Russell futures for whatever reason. It's just not an option. You got the Dow, S&P, NASDAQ. Fun fact, I can't do, like, okay, you go like this, right? 1, 2. I can't get my ring finger to go up next. So like my pinky goes next and then I go full hand. Like the ring finger just doesn't move. So like I can do this. But yeah, so you don't have the Russell as an option. But where you do have it as an option is on the other prop firm, Arctic Funding, which is is really just for stocks only, but they have some ETFs and IWM, DIA, yes, the Dow, SPY, SPY, and then QQQ. So you can get the same kind of coverage. You just don't get the overnight coverage where you can't exit and enter overnight. It's just about the day. So for a swing, you got to be kind of careful if you're going to swing those guys. And so in the case of the Russell, this is on a 4-hour time frame. So let's check it out. I guess I should go inside of here. This is traded on a 10K account and a 25K account with a trade copier copying the exact entries. So I operate on the 10K account because that's what I've been used to trading on. And so then it just does the rest for me. So we had, if you look at the executions, I did take some partial profits here. So the reason why, oh, look at that. You can see when I got out. Boom. That's a cool feature on TradeZella. Link to TradeZella below, by the way. If you want to save 10%, I think the code is TC10. Like, legitimately use it. I paid $400 this past. Actually, you know what? As I think about it, I should have used someone's discount code because I paid full fucking price. But you can use mine if you want. Okay. So before the end of the day on the 5th, which was Thursday, I exited a piece just because you just don't know with the overnight risk. I was like, I don't know, overnight risk here. So I sold 20% of the position so that the rest of so I ended up making about 96, which is a little bit less than what I would like to make on these types of trades because I sold 20% of the position the night before, just because I didn't want to have the overnight exposure. So I don't know, I'll explain why. So that was the trade there. Now, jumping to the charts, here's the 4-hour chart. Okay, this is a beautiful 4-hour chart, in my opinion, prior to the shit show of wicks. Now, if you really don't care about the overall wicks and you're looking at the bigger picture I think was very nice, very clear, in my opinion. So big picture, right? You have the highs right back here. This is back in July. You get the big move down. You kind of grind yourself back up. Boom, lower high. Because we got now a big move down. So now you establish a lower high. Cool. Direction is to the downside on this, couple of week time frame, but not super clear because you don't have a clear downtrend, right? It's not super clear, but you have got lower highs. And then if you zoom in a little bit more and you get a little more granular, you kind of can see, okay, big move down. Trend is to the downside. We're putting some pressure on this level. We've got a big gap on the volume profile for a potential pushback down. And guess what? Where do we go? We go right where the magnet is. The magnet tends to be right into these areas of high volume, and that's exactly what's happening right now. So I guess I could have squeaked out a couple extra bucks here on this trade, to be honest with you. But I took my profits where I took my profits, and I'll explain why and where I took my profits on the IWM chart. But this is where the idea originated. So it was the Russell 2000 futures, because the IWM chart doesn't look like this because you don't get continuous futures, candles of throughout the overnights and all that stuff. So you'll see what I mean. So this chart looks really good. I just didn't like this upper wick and lower wick. No, I didn't trade that. I was looking at it back then, but I didn't trade that because I believe that was on Wednesday and there was some news. There was some big news. It was Wednesday. There was some big news. I know there was some big news on Wednesday as I'm looking back at Wednesday. Job data, job openings, deficit, I don't know, whatever. So we got some news. The market spikes up, spikes down, whatever. Initially, I think it broke in pre-market, I believe, and then it spiked back up, and then we unraveled that the rest of the day. And then Thursday, kind of the same thing. But Thursday, I entered this trade very shortly after our live stream, which if you go back to our live stream from Thursday, you'll see me talking about this specifically. I was like, hey, this is the trade. If there's a trade here, this is the trade. And so we talked about it, and then I got in shortly after, which was on this candle or this area right here, this wick. The market on Thursday, or price, pushed up in pre-market, pushed up again at the open. I thought, okay, we're bouncing. This was a good setup to the downside. If we broke, we're not going to break it, is what it is. Then shortly after that, we start to kind of unwind and the candle starts to come down lower and lower. We get this nice push down. Now, At the time, we start pushing down. I felt pretty good for the first hour or two. As the day goes on, we start to inch back. And I'm like, here we go again with this fucking shit. And that's kind of how I felt because we've had a lot of this choppy price action. So that's what ends up happening on Thursday. And then we get to the end of the day and I go, okay, I'm just gonna, clean house or trim my position here because we finished the day pretty much right at the breakdown level. And I was like, if we finish well above this, I'm gonna get out. If we finish at the level and things still look intact with these lower highs, I still like the setup here. So I'm going to sell 20% of the position and then let the rest ride. Either we're going to hit stop or we're going to hit take profit is what it is. And then I did think today briefly, as I'm summing the video on Friday, I thought today that, okay, now we're getting this upper wick. We got the jobs. We got some job data coming out, whatever the data was in the morning. I don't really care. It doesn't. I know that there is data coming. I don't give a shit what the data is. Some people may find that hard to believe. Some people might be like, what the fuck are you talking? Why? The news is so important. Maybe it is. I don't know. You can make it as important or as least important as you want. I don't know. So I see that. I'm like, oh, maybe we're going to get stopped out. We end up completely unraveling. So we get to pop the first 10, 15 minutes of the day, and we completely unravel, and we go drilling to the lows. Like we don't just like drop off. I mean, the S&P or the Russell was up like 0.5% at one point today, a little over 0.5%. And now it's down over 2%. So that's a big ass move. It's a 2.5% range intraday. So that's a pretty big move. So here's kind of the look, right? Here's the job data that comes out or whatever news came out this morning. I knew there was news, so, whatever. And then I'm like, okay, maybe we're going to get stopped out. I see us start to make a push. We make a push. We can't break the pre-market high. Interesting. And then we start to unravel. Boom. We unravel and we pretty much nail target. Now, I was going to mention, right, where on the 4-hour time frame, this is where the idea originated. But if you go to IWM, where I actually traded this, you would say, well, what the fuck are you looking at? Because this is not a setup on the 4-hour time frame that would really make sense for your strategy. Where is the clear breakdown? There isn't a clear breakdown. You just see kind of a trend to the downside. And that's what you miss with future. That's what you don't get when you look at a 4-hour time frame on a stock that doesn't have continuous trading. So with futures, you get a better look. But on the stock itself, I go, okay, we're on the ETF. I go, IWM, why am I targeting where I target? Well, guess what the gap is? There's a gap to fill on the daily right down to around 208.80. So where did I end up selling this thing? You can literally see my executions. Average exit was at 209.39 because I sold the 20% the day before, but I ended up getting out at 208.88. So we pretty much right at the gap fill. Boom, I'm out. So that's what I was looking for, and that's what essentially guided the target there. Now, could we have gotten more? Yeah, I mean, yeah, we achieved way more than what I was risking, so I was happy to take the gains. But yeah, that was really what it came down to. So a decent setup, but basically, while gaps on the daily, this or that are cool and all, and maybe you can use them. Maybe this is not worth it. It just kind of happened to line up pretty well with what I was looking for about a 1.5 to 1 risk reward. The idea more so, if you jump into the 4-hour time frame on the futures, if you're going to play the Russell, the S&P, the Dow, the Nasdaq, and if you're going to play this type of strategy, whatever, at least to me, I shouldn't even say it. What I should stop saying and trying to talk about this is as if like this is meant to be a journal for me, so people and I will post it so people can see inside of my head. But I'm literally talking to myself, and I see myself in the camera like I literally am talking to myself here. Looking at this, there's with a volume gap like this, there's probably a gap fill on the daily chart associated. There may not be, but there's a decent chance that that's also going to be that's going to be there, right? But what's more important is this is where you have opportunity for the price to move faster through. Here's where you'd be looking for the targets and for where you may want to just look at, hey, if we achieve this area, let's not get greedy and let's lock some gains. It's kind of the deal. So what I could have done is said, okay, maybe take the profits off there and then left a little piece to ride for the full volume gap to fill. Maybe, but I'm not like that. I'm not going to get too caught up in that stuff. Realistically, I found that what I'm doing is working fine. I don't need to adjust and change and try to scale out and then, move my stops and then all this different stuff. Try to keep it as simple as possible, don't think. And the simplest play here was We break the consolidation. The overall trend is bearish. We're looking bearish. We're breaking the consolidation lows. Yes, did it happen on high momentum? No, it did not. It did not. I totally, I get it. But the bigger picture, when you're looking at a 4-hour chart, as long as you allow your stop and allow the trade to breathe in terms of the bigger picture, you're okay. Because I find myself the past couple of weeks too, in the losing streak, you know, keeping or trying to keep the stops so fucking tight so that my losses are so small. But what I'm doing is I've ended up missing out on a couple of trades because I didn't allow for the bigger picture just to play out. And yes, it was choppier. Yes, I don't think that the problem has necessarily been we are just not in a great environment for my strategy. That there will be times where things are really, really good and times where things are really, really bad for your strategy. That's just inevitable. I've gone through the past 16 months. Like I see it, I feel it, I know it, I know it. I know when it's working and when it's not. And I know this is not the most optimal, but in the times where it's not the most optimal, what I should be allowing myself is looking at the bigger picture and let the trade to work. Does that mean make the stops fucking huge and the targets tiny and now look for a 1-to-1 risk reward? No, it doesn't mean that, but it just means that frame it in the bigger picture. So if my stop has to be above these wicks right here for me to make sense for me and for this to pan out, meaning like if we break those upper wicks, we start to invalidate this trend to the downside. We invalidate the weakness that we're seeing, then that's where we're out. But if I put my stop so fucking tight in here just so that I can get a 6-to-1 risk reward, I mean, I'm going to get stopped out so many times. And maybe I'll get one at some point, but I'm going to get stopped out so many times. And so then it's like, can you handle that? Like, is that worth it? And then will you be able to handle that? I personally, I'm not a fan of it. I'm much happier with a 40 to 50% win rate and then with my risk reward. I just, it works for me. That's just what, for now, that's what makes sense. Maybe I want to rip my hair out one day and change it. I don't know. But for now, that's the deal. So that's the recap on the Russell. There is a trade recap coming out tomorrow on Google. So stay tuned for that. But yeah, I mean, that's just what it, you know, there you go. So not to get too deep into this stuff, but you have essentially, you know, this is actually, the P&L is a little bit off because it's got some of the Google trades, got half the Google trade in there. So now it looks like I made a lot of money today. It looks like I made 524, and actually I should be making more once the full trade is closed. But stay tuned for the next video. See how much I make on the Google trade. Should be, very much should be green on the month after starting off down $600+ with 2 winning trades. Two winning trades. I've had technically 2. I've had a lot more losers. But in my view, good risk management, let the trades work and just observe and operate. Observe and operate. Observe and operate as I should. It's not about the P&Ls. I don't even know how much money I know how much money I make on the $10,000 account, but with the trade copier, I legitimately don't even know how much money I'm going to make on the other account. Now, I guess you can do the math saying, okay, well, it's 2.5x. What? Yeah, okay. But I know what I risk. I know what my targets are, and that's it. And this, if I trade the way that what I should be doing and do what I should be doing, I think we'll be in a very nice rhythm here. So hopefully we continue the rhythm. I'll see you guys in the next one. I guess I'll again link to TradeZilla below. Code TC10, save you 10%. And I'll see you in the Google trade. Peace.